Welcome to the Business Finance Bulletin, episode 164. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, small business finance from Clydesdale and Yorkshire Bank, growth plans and appetite to borrow, and funding circle and property development finance. Let's start this bulletin with some positive news from Clydesdale and Yorkshire Bank. And they've just announced that they've put together a fund totaling £6 billion, which they are looking to lend out to growing small businesses during 2017 to 2019. Of that sum, £2 billion has been allocated to lend in 2017. Now, this comes on the back of an interesting survey that Clydesdale and Yorkshire have carried out, asking business owners about their borrowing experience and, if they are successful, what they would use the money for. Interestingly, the survey found that 35% of business owners have said that they are still finding access to finance difficult. But if they were successful, what would they use the money for? Well, 24% of them said they would immediately go out and hire new staff, which is a very positive sign. 20% of them would go and invest in new capital expenditure, plant and equipment, and invest in the business generally. 20% would buy a premises or refurbish an existing one, and 18% of them said that they would just use the cash to replenish their working capital. So all good, positive reasons there as to what you would do if you were able to borrow money. So if you are in the area where Clydesdale and Yorkshire Bank are and you want to know more, just go along to the respective websites, which is Clydesdale Bank is cbonline.co.uk, and for Yorkshire Bank it's ybonline.co.uk. How are business owners feeling about where they are today and their plans over the next 12 months? Well, that's a question asked every month by the SME Finance Monitor team. Every month they produce a 3-month rolling report on attitudes to growth and financing the economy generally. And the latest 3-monthly report is as at the end of March 2017. Now, the report reveals that on a 3-month basis to the end of March, 38% of businesses have said that over the last 12 months, their growth rate has remained stable, which is not bad considering the environment we're in. In terms of appetite to grow, 43% of them have said they are planning to grow. But if you strip out those businesses that export only, or only export driven businesses, then that ambition to grow goes to 52% of businesses surveyed. So you can see there's a great ambition to go out there and find new markets in the export space. Now, what about appetite to borrow? Well, I've mentioned in previous bulletins there are signs coming out that business owners are a little bit reluctant to borrow money, and this proves to be the case. In fact, they said that 34% of businesses are willing to borrow money to fund growth, yet only about a third. And that compares in the previous quarter, the end of quarter 4 2016, when 42% of businesses said that they were willing to borrow to fund growth. So we can see there's a shrinkage in the appetite in which to borrow money. So interesting stats come out there, and as the future reports come out, I will share those with you. It'll be interesting to see about this appetite to borrow, whether that waning and that reluctance to borrow does continue. Funding Circle, one of the big giants in the peer-to-peer lending scene, has announced a change in focus. Now, as we know, Funding Circle is mainly known for lending unsecured business loans up to 5 years, so very good for quick asset purchases, additional working capital. But a few years ago, they actually ventured into the property development finance world as well. Well, they just announced that they are now going to stop lending to property developers. They don't explain why, other than that it's a bit more time-consuming, and they really want to focus on what they are known for, which is very swift, quick actions and answers on unsecured business loans. Now, with us having done a lot of property development finance loans, we know that they are time-consuming. There's a lot of work goes into them in order to assess whether the deal is good, and also the ongoing monitoring. So probably Funding Circle has found that it is taking up a lot of resource in order to assess them and monitor them going forward. So perhaps it makes good sense that they've decided to focus on where they are strong. And there's a good message there for all businesses. Are there parts of your business that perhaps you've bolted on over the last couple of years, which in reality don't fit quite well with how the rest of your business runs? And perhaps you should take a leaf out of Funding Circle's book and do some heavy pruning and get back to where your strengths lie. Well, that's it for another bulletin, and as ever, I hope you enjoyed it, and if you did, please give it a like and a share. Don't forget, if you're on the video version, you can listen to the podcast version for you to download and listen to at your leisure, which is available on iTunes, SoundCloud and Stitcher. All you have to do is go to those channels and search for a Business Finance Bulletin. Well, thanks very much for being with me. I hope you enjoyed it, and I look forward to being with you again next time, sharing more tips and ideas on raising finance and dealing with banks. Have a great, successful and profitable week. Bye-bye now.